Hello everyone, this is Terry with Futures.io, and as always I would like to thank you for joining us today. Now it is my pleasure to welcome back Kevin Davey for today's webinar on what is and the how-tos of trading automation. If you have a question, please feel free to type it into the questions box. We'll do our best to answer it at the end of the event. If you're watching this on YouTube, please do us a favor and give us a thumbs up if you enjoy the webinar. And as always, please feel free to share, comment, and subscribe to the channel. It really helps us a lot. For trading news, events, and information, follow us on Facebook, YouTube, and Twitter using @Futures.io. And without further delay, I will hand it over to Kevin, and you should get the pop-up box to share your screen.
Okay, I see the box, and there we go.
All right, looking
All right.
good.
All right, thanks, Terry, and welcome everyone. And first, I just want to thank Big Mike and Terry, and all of Futures.io for sponsoring today's event. I've done quite a few of these, and you guys must like what I have to say because you keep inviting me back. So that's always nice to know that people are listening and people get something out of these, and hopefully everybody listening today will feel the same way. So today what I'm going to talk about, first, for those of you who don't know me, I'm going to do a quick bio and a little bit about myself, and then we're going to talk about automation, and probably at the same time we're going to be talking about algo trading, and because those two are kind of connected. We'll talk about advantages and disadvantages and how to get started, and probably what I'll do is I'll save most of the questions for the very end. So if you have questions, just send them in. I'll keep them. I'll just go through them at the end. Try to keep it to an hour, a little bit over with the questions. But if I don't answer your question, you can always feel free to email me, and I'll give you my email address at the end. And we are going to have a book giveaway at the end, which I'll talk about in a minute. First, I'm going to be showing probably some equity curves and results and that kind of thing. So put up this disclaimer, don't trade with money you can't afford to lose. Past performance is not indicative of future results. A lot of good stuff in this disclaimer. So, people are used to seeing disclaimers and just saying, that's just a bunch of legal stuff. But this is actually a really good one. So make sure you know what's in it. Okay, so for those of you who don't know me, I'm a full-time trader. I also do some part-time consulting, teaching, writing. Been trading about 25 years, over 25 years. About the last 10 or so have been full-time, so I was able to make that leap from part-time to full-time. And 3 years straight, I finished in first or second place in the World Cup of Futures Trading Championship. That's a real money, year-long contest. And each of those years, I had over 100% return, and that's against some pretty good traders, so it was a pretty neat thing. I'm coming to you today from Cleveland, Ohio. It's the red dot on the map to the left, and about an hour ago or so, this was the view out my window, and you can see there's a cherry tree, which is right on the edge of Lake Erie. It's going to fall in soon, but it's starting to blossom. We had a late spring here, and my goal trading, I always joke about it, is to be in the lower right corner of that picture where the hammock is, and to be able to sit there and just kind of look at the water and stuff. And some days I can do it, and other days, the losing days, I don't feel as much like relaxing because I feel there's always more trading work to be done to get better. So that's a little bit about where I am. I just released a new book. It's called Intro to Algo Trading. You can get it on Amazon, and if you're a Kindle reader and if you're in the Kindle Unlimited program, you can actually read it for free. Otherwise, it's a couple bucks. But it came out a couple days ago and kind of jumped. A bunch of people were interested and jumped to #1. So it might be, if you're interested in algo trading and you don't know anything about it, this is a short book. It's an easy read. Might be something worth checking out. And then I also, a few years ago, almost 4 years ago now, my original book came out, Building Winning Algorithmic Trading Systems. And that's won a few awards, and that's kind of been around a long time. But I've written that, and then that's the book I'm going to be giving away at the end. So my autographed copy to somebody who answers a question correctly. I will give you a copy of that book anywhere you are in the world, no matter what the postage is. And usually it seems like people in Australia and Europe win it. So it takes them a little while to get it, and I have to fill out all these customs forms and stuff. But hey, there's a benefit to winning, right? So final thing about me, I also teach an online class. It's called the Strategy Factory Workshop, in case you're interested in learning more about algorithmic automated trading. You might want to check that out. Okay, so let's talk about automation or robots. A lot of people, a few years ago, it was all the rage was talking about Forex with all the robots, these expert advisors that people would run in MetaTrader primarily. Is it easy profits? Well, if you do an internet search, it sure looks like it's easy. Here's 100% profit per month, and here's a list of the most profitable expert advisors. Not are there any? It's here's a big list of them all, and a lot of people out there make it seem like, hey, just turn on automation and there you go, and you start making money. Well, hopefully you guys have been trading. For those of you who have been trading a little while, you know that that's not true. There's no trading that's just automatic, that's easy. I always get suspicious when people say, oh, this is easy, I just do it for a little bit a day, or I just turn the robot on and walk away. Trading's hard, and a lot of people don't like to admit that they're competing against people, but there's only a certain number of dollars out there, and if everybody was winning trading, there'd be no people losing money, and the money wouldn't be there. So there's really no such thing as easy profit. So if you were expecting this webinar to say, hey, there's easy profits, not going to happen. And beware of those people. Beware of anyone who says it's easy, trading is easy money, or especially automation. Okay, so just with that out of the way, what is automation? I mean, all it is, let's just keep it real simple. It's just a way that the computer will buy and sell for you automatically without your intervention. And you might have heard of it as algorithmic trading, rule-based trading, mechanical, systematic, robot. There's a whole bunch of different names for it, but it's all about the same thing. It's just you're turning over execution to some software, and they're doing it for you. Okay. Algo's the one that scares people. People hear algorithmic, and a lot of people just freak out. It's funny. Because I talk to people and they're like, oh, algo trading, I don't know if I want to do that. And then I say, well, what about just trading through some rules? Oh, okay, yeah, I can do that. Well, it's the same thing. And that's what you got to realize. I think people get scared because they think of algo trading as this high frequency trading. And you've all heard horror stories of these big firms that they have a software glitch and all of a sudden they've lost all kinds of money because they were high frequency trading, and it kind of bugged out and stuff. That can all happen, and high frequency trading can, on the one hand, it can be very profitable to people who can do it, but usually it costs a lot of money to enter that game, as far as like infrastructure and all that kind of stuff. So, I'm assuming you're a retail trader. That's probably why you're here. Just stay away from this high frequency world. We don't have to play the high frequency game, and you can still succeed with longer term trading. I think it's just too hard for a retail trader to do any kind of high frequency trading. Maybe some people have come close, I don't know. But I do more swing trading. These trades last, some are intraday, but a lot last days to weeks. You go for those longer term trends. And if you think about it, the one thing that lets you do is to trade less frequently. And when you trade less frequently, it also means you pay less in commissions and you're less likely to get hit by these high frequency guys, right? Think about the person who's trading 100 times a day. Well, every time they enter and exit, there's going to be some high frequency players right around them, probably stealing, a tick here or there from them. But if you're only trading once a week in a certain market, the high frequency people can't take as much from you. So there's a big benefit to that. So again, don't be intimidated by that algo word. It's just rules to trade by. And then, like I said, automated trading is just taking that algo and letting the computer execute the orders. That's all it is. So it's not as complicated as a lot of people make it out to be. Now, of course, when you automate, you can do it a few different ways. You can do what I would consider full automation, where practically everything is controlled by the computer or your software, your buying rules, your selling rules, your size, all that. That's what I do. That's most of my trading is consisting of that. Or you can do partial. There's people out there who trade discretionary off of chart patterns, and when they get in, then they turn on an exit automator to automatically monitor and get out of their position, maybe move to break even, and all sorts of stuff like that. They're automating part of their trading, which is pretty cool. They could also automate the entry and then control the exit. So you don't have to do necessarily full automation. You don't have to be a quote unquote algo trader to use some automation. But basically automation can help you. It can take some of that load off of you, especially those people who stare at the screen all day and trade. Might give you a little break. So both of these methods can work. Of course, they can both backfire. They can definitely both go against you. So today I'm going to talk mainly about full automation because that's obviously where my experience lies. And don't get the impression that I'm saying don't do partial or people who do partial aren't as good as people who do full. There's a lot of different ways to trade, and there's a lot of different ways to trade successfully. Of course, all those ways you can also lose too. At the end of the day, you got to trade in a way that you feel comfortable. That's the big thing. As long as you feel comfortable with automating maybe part of it, all of what you're doing, or none of it, that's a good way to go. But I'm going to kind of explain some of the things to think about if you're looking at automating, some of the pros and cons. So let's start out with the pros, okay? There's probably a whole bunch of, there are a whole bunch of them, but I'm just going to concentrate on 3 of them just to keep it kind of simple today. And I'm going to, again, focus on you guys, which are retail traders. The first one is to reduce emotion. We've all been that guy right there with the losing trade and you're, oh no, I did it again. But notice what I said here. I said reduce emotion. I didn't say eliminate emotion. And it's sort of almost become a pet peeve of mine that so many people out there tell you to automate because it eliminates emotion. And First I thought it was kind of funny. And then after a little while of hearing that, I kind of now get a little mad when I hear that because it's absolutely not true. And two, it tells me more about the person who's saying it because I feel there is emotion all the time. And it's because of that bottom line in that last point, because of money. Anytime there is money involved, there's going to be emotion. Unless you absolutely do not care about money, in which case, why are you doing this, right? Everybody cares about money. They want more, right? You don't do this as a charity. You don't intentionally go to lose money. So you're going to make money, and there's going to be emotion involved. So my personal theory is people who say, hey, automation eliminates emotion, usually are either not traders or they really have some kind of screwed up idea of what money means and why it's important. Automation can certainly reduce it, but it's never going to eliminate it. And the biggest thing I noticed is it kind of changes. So, if you're a chart trader, ooh, should I take this trade? I don't know. Oh, that looks like a good setup. No, maybe. And your emotions. Oh, the last trade I did this, I lost $200. Ooh, should I do it again? That's kind of the way you think, right? And your emotions can kind of influence you. Now, if you do an automated route or like an algo, it might be, oh, my last couple trades lost money. Maybe I should turn the algo off today. That's how your emotions change. They change what you're doing, but you still get all stomach churned and that kind of thing. The only thing that gets rid of that is just the amount of time you spend trading, and eventually your emotions don't matter as much. Okay, so we got emotions. So I'm saying they're still around, they can just be reduced, but that is an advantage, especially if you're having trouble pulling the trigger with a trade where you get scared. Hey, automation, it doesn't get scared. But again, you got to keep the automation running. So, and if, I've talked to plenty of people who've said they're going to automate to eliminate emotion, and then they tell you, well, they turn off their system certain times of the day when they get scared. That's the same thing, right? All right. So our second advantage, it can be back tested. Now remember when I was showing that disclaimer a little bit ago, I said past performance is not indicative of future results. So what that means, they're saying, hey, just because something worked in the past doesn't mean it's going to work going forward. Absolutely true. But at the same time, if you have a system that can be automated, you can usually back test it, and it's nice to know something worked in the past, right? Because then it's easier to say, okay, well, if I keep doing this, if I buy with these rules, sell with these rules, it's made money over the past 10 years. Makes it easier to be consistent with your trading because, yes, I should take that trade. Yes, I should follow that. And it's really a difference between knowing you have an edge and you don't have an edge, right? How else would you really know unless you trade in real time for a long time, right? I mean, you take a trade today, one trade, you could make money or lose money. Doesn't mean you have an edge. Could be luck. Luck plays a big factor a lot of times in trading over the short run. Over the long run, though, being able to back test is definitely an advantage with automation because you can see how things have done. Okay, so that's the second advantage. So we have reducing emotions or changing your emotions a little bit. We have being able to back test, and then we have freedom. You're not chained to the desk where you can't go for a bathroom break because you might miss a setup in the market, right? And I've known a lot of discretionary traders who are just like that, where, boy, if I try to talk to them between 9 o'clock and 4 p.m. any day, they practically tear my head off because it was taken away from their screen time. So a lot of people feel like this. Well, if you go and automate, that doesn't necessarily happen anymore. You don't have to sit at a screen all day. You can have your algos running and you can be doing other tasks. So a lot of what I do is I'll be developing other systems. Strategies I might be trading a year from now, I'll be working on those today while my algos are running. So I might still be at my desk or nearby, but I'm not glued to it. I can get up and go walk away and do stuff. The big thing, a lot of people think automated trading means unattended. And that's a fallacy. Yeah, you can kind of, you don't have to be glued to your screen, but you got to know what's going on because there's a lot of weird things that happen with unattended trading when you just let it go. There'll be a recalculation, for example, and depending on your software, you might get new orders sent. I was talking to somebody I'm working with at a hedge fund and talking to him today, and he had a situation where he had an order placed and then placed again and placed again. And then it got filled. So he basically got filled at 3 times what he thought he was supposed to. And I think the issue was there was a data recalculation and an order, the strategy recalculated and got resubmitted without the old one being canceled. That kind of thing happens. So you got to be careful about being unattended. Okay, so that's just 3. For those of you who've done some automated trading, maybe type in the chat box or the question box what you think might be some other advantages, and I can kind of talk about them a little bit. Type them in the chat box if you can. I don't see the question box. Maybe Terry sees it, but I don't see the question box up on mine. So if you type them in the chat box, I can definitely see it. Okay, I don't see any yet. So maybe no one can think of any other advantages, or maybe I just didn't see them, but maybe in the question and answer session, we'll get to them if anybody has those. All right, so let's talk about some disadvantages. The first one is what I call craziness. And there's a couple different aspects to that, but basically, if you just come into your trading platform and immediately try to automate something without really knowing what's going on, you're really gonna you can easily program things incorrectly. You can send tons of orders. I remember talking to a guy at one of the brokerages where he was running an automated thing. This was with NinjaTrader, and he had one little bug in his program, and all of a sudden he had like 200 orders to buy the mini S&P at the market. Each was one contract, and what ended up happening was I think he got to about 10, and then that maxed out his margin in his account. But then it kept sending orders, and he eventually had to just shut it down. That can happen. So that's what sim mode is good for. People always think the sim mode should give them good performance numbers, and that's not necessarily true. But what sim mode can do in any software is it can show you if you're sending a lot of duplicate orders and that kind of thing. So it can kind of keep you in line, which is really good because you want to test that out, especially if you're doing something unique that you've never done before. You should probably test out in sim mode and just see if it's working right. So yeah, the automated trading can definitely get crazy if you let it. Another disadvantage is you're going to constantly have mismatches. Here's an example. This is TradeStation. They have a column that's called positions match, and you see it all says true, so that then I know my strategy and my actual positions match in one, that particular account. These go false sometimes. An order doesn't get sent, something doesn't get filled, and sometimes I can figure out why, sometimes I can't. But the thing is, mismatches occur, and you've got to be able to quickly recognize it and correct it. It doesn't do any good for you to come back 2 days later and say, ooh, I should have been long, the Bitcoin futures and I was short. Oh man. That's what you got to watch out for. So that's definitely a disadvantage. You got to be able to realize you got to watch it. It doesn't correct itself all the time. There's ways you can do that, but still, a lot of times a human watching it is the best way to go. You could probably program a lot of it, but you might spend more time programming than you do actually trading then, because there's a lot of little things that can happen when you automate. And again, some strategies just by design, if the design is off, the way you do it, you can have frequent mismatches. So you got to be careful with that. So that can be a big disadvantage, because all of a sudden, trade you thought would win was winning up, you never got in it because for whatever reason, or you were the exact opposite and you didn't get the benefit from it. And that happens a lot. And I'll tell you, when it happens, well, a lot's relative. It's not a lot, but when it happens, at least what I remember, all the times when I lose money, you would think over time it would kind of even out, and it probably does, but what you remember, at least what I remember, are the times when I didn't benefit from a mismatch. I'll remember all the times where it cost me money. And that's a good way to remember it, because then you work on correcting that. Okay, a third disadvantage is obedience. And so I found this picture of a dog who won't go with his owner. He's just sitting there, he's kind of like, I'm not moving. Why is that important? Well, the computer only does what you tell it, right? And if you have a poor strategy, well, the computer's going to be obedient, but you're going to lose money. If you have a poor setup, if you have an internet connection that always goes down, you're probably going to lose money because of it. And if you're not watching and you don't have good oversight of your strategies that are running, you're probably going to lose money. So yeah, the computer does what you tell it, but there's a lot of other factors that kind of get in there. So you got to be careful about all that. Maybe you guys have some disadvantages. Type them in the question box, and when we get to the question part, Terry can bring them up to me. Okay, so we talked about advantages, we talked about disadvantages. Why don't we get started? How do you get started doing this? Let's say, okay, yeah, automation's not perfect, okay, but I still want to do it. What do you do? Okay, well, obviously the first thing is that your platform and broker support it, however you're trading. If they don't, you got a major disconnect there. And you got to make sure that it does it the way you want to do it. Different brokers are lined up with different platforms, and some of the platforms can do certain things and some can't. There's all sorts of stuff. So you got to figure out which way you're going to do it, and if it doesn't fit your needs, you got to find another. So for me, I use TradeStation. I've used it for years, but part of the reason was back when I started doing it, TradeStation was pretty much the answer, or the most popular answer. And there's definitely limitations to it, and I've just kind of worked around those. Maybe today if I was starting from scratch, I'd look at what I was doing and maybe I'd decide a different platform is better. I don't know. But the point is, if it doesn't fit your needs, if you must have a certain type of automation, let's just say you're looking at exits with some chart trading entries that you're going to be discretionary. If it doesn't work right, it doesn't do exactly what you want, and you can't get it to, you got to find another platform. Or if it doesn't connect to your broker, TradeStation is connected to TradeStation brokerage. Ninja used to be with all kinds of brokers. Now it's basically Ninja brokerage with a few others, but they've severely limited the number. Maybe your favorite broker doesn't support your platform, so you might have to do something. This API is application programming interface, I think it stands for. I might have that wrong, but it's basically like a way for computer programs to talk to each other. So you might need to do that to connect your platform to your broker. And that could be a lot of work. And it could be a lot of debugging and programming. So if you're thinking about doing that, realize that might be part of it. And some of them are simple, and some things are really complicated. And you got to realize which is which relative to what you want to do. So it doesn't sound that hard, but this step is probably one of the hardest, because it's not like you can just do it in an hour and figure out, oh, this is what I need, and go and do it. You might need to go back and, oh, it doesn't do this, well, maybe I need to look again, and it could be an iterative type process. That's the first step. Step 2, read all you can. So I just typed in Google TradeStation automation, and there's all kinds of videos, all kinds of stuff that comes up that show you how to do it. And that would be true for any platform. And at least then you can see how it's either recommended to do by the software vendor or how other people do it. That's really step 2. And that's, from this, you might watch a bunch of things and read some things and then be like, oh man, this isn't going to work. And you have to go back to step 1 and look at a different platform. But hey, it's better to do this than to just think you can automate, turn it on, and just go. And you might laugh and say, well, who does that? People do. It's amazing how many people trade and automate and do things before they should, because they're so excited to start doing it. Take your time. There's no rush to do all this. Okay, so now you've picked the platform, you watched some videos and read the information, you've determined, hey, this can do what I want. Well, then you just have to figure out the actual steps in your software. And so with like TradeStation, it's basically like a 6-step, 6 little clicks. You turn the strategy on, you check mark to generate orders, you check mark automate execution, you select your account number, you turn the confirmation on or off, and then you hit close. And then you're automated. And then it will start taking trades that your strategy is programmed to take. Pretty simple. But realize I've already done a lot of stuff before then. And then step 4, I tell people, hey, try it out in sim mode. Just make sure it's doing what you want to do. Is it behaving, or is it generating hundreds of orders? Gotta be careful with that, because one, you could hurt your account too if you're sending messages all the time, buy, cancel, you know, cancel, replace. If you're doing a ton of that without actually placing orders, you could, it's not likely, but you could run into the exchange limits for messaging, where they have a certain number of, you're allowed certain number of messages to be sent, like cancel, replace orders, without a fill, but at some point they could actually fine you or prevent you from trading if it gets excessive enough. You know, because they don't want people sending hundreds of orders every second and canceling most of them, because that just ties up all their bandwidth and, you know, that kind of thing. So you got to have enough fills to justify what you're doing. So testing out on sim is a good way to do it. Now, usually for most of us who are retail trading, especially if you're swing trading, you're not going to be doing that. So you probably don't have to worry about it. But if you're trying to scalp and you're moving stops all the time, there's a possibility you might get that. So you got to be careful about it. Okay, step 5. Hey, you've gone through all this. You've tested out in sim. Now run live. And at first, you're going to be watching. You're probably going to be watching a lot. Make sure it's taking orders and doing things right. But eventually, you might use your phone to just remote in to your desktop. That's what I do a lot of the time. So I'll remote in to my main computer and see how I'm doing. Maybe you're going to run on a server, a private server, and then you can just remote in and check your positions. So you don't have to be glued to the screen, which is obviously one of the advantages of it. Okay, so that's really it. You know, I tried to keep it simple and really tried to get you to think about if this is even something you might want to do, you know, and not make it sound so scary. I could have easily made this presentation something that just sounded so intimidating you never try it, but it really doesn't have to be. It can be simple, and as you build confidence, you can get more complicated in what you're doing. But just remember, even though there's advantages, for every advantage, there's definitely a disadvantage, probably more disadvantages, because there's a lot of ways you can mess this up. And a whole key to doing this right is knowing whatever platform you're using, learning to use it, learning its specifics. So keep that in mind too. All right, well, we'll do questions and answers in a second. What I want to do first is a book giveaway. And Terry, I'll need your help here because I don't see the question box on my end. I think it's going to be, people should just enter the answer, and then I'll tell you, Terry, which one to pick as far as the correct one or the number. So it's going to be the fourth person to give me one advantage for automated trading. And Terry, you can just tell people when to stop.
I actually bumped you up to organizer, so you should be able to see the box now.
Yep.
Okay, that way you can go through. They started at 410 was the first.
Yep, I see Guy, Xavier, it looks like Lee, Lee G. He said no emotions. He was, or I'm sorry, Lee was the third person. It was that, I'm sorry, Lee. You know what though, I said you won. So Lee, you won, and Steve N. He also said less emotion. So both of you, I'll send you each a copy. I feel bad. I hate saying somebody's a winner and say, oops, no, you're not. So Lee and Steve, just send me an email, or Terry will get me your email, and I will send a book out to you. Again, the answers were reduce emotion, you can back test it, and you get some freedom. There's my email address for Lee and Steve. You can email me there. And if it's okay with you, Terry, I'll just start going through some of the comments and
Absolutely.
questions.
Yep.
And okay, so people were talking, earlier I said, hey, if you have some advantages and disadvantages, what do you think? And I'll comment on it. Okay, so somebody said automation is disciplined. That's huge. That's a huge advantage, because when you're disciplined, you tend to be consistent, and that helps with a lot of things. So I would definitely agree with that. Split second decision and queuing of your order. Dory mentioned that. That's true. Although a lot of it depends how quickly you trade. If you're more of a swing trader and slow, the split second decisions aren't really going to affect you that much. But certainly, if you're trading intraday, that would be more of a thing. Oprah said, can quantify the advantage you have, and that would be via back testing. Okay, so those are some good advantages that I didn't really mention. So obviously, some of you people are either automating or thinking about it. So that's cool. Then disadvantages, mismatches. That's a big one. Another advantage, you can trade numerous markets. Yep. A weakness with TradeStation, you can't do market replay. Yeah, that's a big one, especially if you're discretionary trading. I've never really found the need to use it, but that's because I back test and I can back test. But if you're a discretionary trader and your rules are based on your feelings and stuff, market replay is a good way to do it. Okay, so I think that's, yeah, there's some other ones, but now I'll just start going through questions. So it's a combination of questions, answers, advantages, disadvantages. Okay, so Andrea, or Andrea, I'm not sure if you're Italian, it's probably Andrea. I apologize if I pronounce your name wrong. In your book, I read you use NinjaTrader and TradeStation. Do you use these as different tools, or do you make some kind of integration between the tool? Is the setup like NinjaTrader and Interactive Brokers a robust and viable solution? The answer would be yes, it could be. What I do, I use TradeStation for my development because I've used it for 15 years. But what I also own Ninja, and what I do is I will have TradeStation send orders to Ninja that then go on to another broker. So I use TradeStation as a brokerage, and I also use Ninja as another brokerage. And it's not actually NinjaTrader brokerage, it's a third party. It's actually DeCarly Trading. You've probably, I think she's been on here before, Carly Garner. And so I do some of the automation through them, and that's a very viable, and it's easy, and it works. Even though it's an extra piece of software in there with Ninja, it works great, and I love it. And Trev's asking thoughts on NinjaTrader. For what I use it for, I love it. I love NinjaTrader support. And anytime I ever have a question, I had one a couple weeks ago, and boy, they answered me, and then the first person realized they didn't answer well enough, and so they put it to a second person, and they really went kind of all out to help me. So I was really impressed with their support. And you don't get that with every single software platform. But I don't use Ninja for development and for trading strategies, only because I like the simplicity of easy language, which is TradeStation. It's also used basically by multi-chart. So, and that might be a personal preference. I just find it easier to program with TradeStation. Okay. A guy mentions an advantage for the beginner. You can leverage some good technology that's out there. Yeah, you don't have to rewrite everything. Some people think you have to create all this software yourself. No, there's a lot of good software out there. Dory's asking, what's my favorite time frame to auto trade? And do I have any intraday strategies? Most of my strategies are are probably based on daily bars. And then I go lower, 60-minute, 30-minute. I have a handful of intraday. I'd like to have all intraday, but intraday strategies are hard to find a long-term edge, where daily bars I find are good. And somebody might say, well, why? Well, a lot of times I'm going off the closing price, the settlement price of daily bars, which when you think about it, that's what everybody is calculated as far as overnight equity and, you know, all that. You're always marked to market in your account statements. And what's always used is that settlement price. So that settlement price means something. And I think that, and the fact that it's not as noisy day to day as like minute data, that tends to be a little easier. So that's kind of what I stick with. Okay, and Dory's saying, can you show some trades from your strats and overall performance? I don't have a lot of that up here, but I will show you one strategy. Here's one. This is at least through the end of January. This is an actual strategy I trade myself. This is the Japanese yen. It's a 360-minute chart. It's a pretty simple pattern. And I want to say, I don't remember quite when, where on this chart the development ended, but it was in 2012, I believe, is when I wrote the program. So roughly, this is what, 17 years. So roughly about half of this chart is out of sample. And this is a pretty good strategy. You know, it's making new highs, but at the same time, it's not a perfect straight line. To me, this is what I would consider a realistic, good strategy that can be automated. And you know, it had a good back test. That's probably maybe the first 300 to 400 trades, and then the last 300 or so trades have been live. And you can see it keeps making new highs, but it doesn't make a new high every day. A lot of people think, oh, I got to be making money every day. My experience, that doesn't happen. And maybe I'm just doing it wrong, but I don't think. I think I'm doing it as not as well as it can be done, but pretty well. Okay. Let's see here. We've got some more. If you've got some more questions in here, Demetrius, when do you know that walk forward test of a trading strategy is successful? And he's asking that from Greece, so thanks for staying up late to listen to this. It is, what you got to do is you got to have certain criteria. And you know, there's a lot of good information out there that you can find where people talk about what's acceptable and what isn't. The one thing I always warn people about is don't look for perfection. A lot of people look and say, oh, I got to have a perfect back test. You know, I got to have a great looking chart and everything's got to be great. I got to make money long side, short side every year or every month. And what they do is they'll rerun walk forward tests. They'll do a walk forward test and, ooh, I don't like this part of the curve. And then they'll just keep going and modifying, and all of a sudden their walk forward test, which is supposed to be out of sample, isn't. And they've created a great looking back test, but it's not going to work in the real world. So part of your criteria has to be realizing when it's good enough and then just quitting. You know, think about this chart that I'm showing you guys here. Let's just say at chart like trade 350 was when development stopped. I could have looked at this and said, wow, I can do a lot better. You know, look at this drawdown and look at this flat period and that kind of thing. And I could have gone back and added rules to make it better, but it would have made the, you know, the left part of the chart better. It doesn't mean the right part's going to be better, the real time part. And that's a lot of people, especially people who are used to thinking they can solve problems correctly. and looking for perfection, that can kind of backfire on you. Alexander's asking, thanks for the question. Alexander's asking, have you tried Python for trading? No, I haven't. I know people do it. I just haven't, so I can't really comment on it. Robert's asking, any comments on various platforms? I'm biased. I'll admit I'm biased. I use TradeStation. I've used TradeStation for 15 years. So for me at this point to switch is nearly impossible, as long as TradeStation's in business, which I assume they're going to be. They probably have the biggest user base. There's probably more code out there for TradeStation than anything else. And it's funny, the people who you find in the trading world who use TradeStation, a lot of them have been around a while, and that tells you something about their success rate. NinjaTrader's good, and there's a lot of good stuff to that. I think a lot of people use it though because it's free, and they might not necessarily be as good of a trader. So I use TradeStation, but really any platform can work. You got to find out what you're comfortable with. One thing, and I mentioned this in my little book that I just put out, is get a copy of Technical Analysis of Stocks and Commodities magazine. And every month they take one of their articles, and they'll have 10 to 15 different software vendors code that indicator or that strategy. They'll code it in their format. And a lot of it's printed in the magazine, or you can access the website and see the code and stuff. And if you know nothing about computer code, that's a nice way to look at it. And if you look at the platform X code and it looks like gibberish, but another platform, you can read it and oh, okay, I see what they're doing. Oh, that rule they're buying. If you can kind of follow the logic with the computer language, that kind of tells you that one might be a good one for you to work with, because it kind of makes sense to you. And if you're a hardcore programmer, you might choose one kind of language, but if you're kind of a different non-programmer, you might choose something else. So it's something to keep in mind. Okay, Lee, the book winner, has said he's been working on an options trading algo system using options. I can only forward test because of lack of historical option data. Do you have any solution to this issue? Yeah, I don't trade options. Lee's like, man, that's not what I wanted to hear. You hit on it. You hit on part of it. The historical data is really tough with options, even on a liquid market like ES, because a lot of times, even if you got the last price traded, it doesn't mean the bid and ask were at that price. So there's that. And also, when you start incorporating different options with different expiration dates and different strike prices, and now it's calls and puts. Oh, should you buy a call? Should you sell a put? Which sort of is the same thing, but depending on how you do it, you can mess it up. So I'll tell you what I've done when I have traded some options. I create a strategy in futures first, make sure I have an edge, and then I look to apply it with options. So, and the simplest way is, well, okay, if my strategy says go long, I'll buy an at-the-money call option, for example. And it might be one that's real near expiration, so you don't pay a lot of time value if I know it's going to be a 2-day trade. And actually, this is what I did. I created a system that would buy or sell Thursday morning in the ES, knowing there was a Friday afternoon expiration. So right then I've eliminated some of the variables, and I know which option I'm getting, and I was able to pinpoint, hey, okay, maybe I should buy a call or put 10 points out of the money. And somebody say, well, hey, why don't you just trade the futures? what you can do in certain instances, sometimes it will be better to trade the futures. And so I had that as part of my decision, where sometimes I would do the futures, but sometimes it was better to, depending on the option price, it was better to trade the option, and I could probably maybe buy 3 to 5 times as many options for the same risk I would have had with futures. And in that case, my leverage, if it's a winning trade, goes up a whole ton. So that's kind of how I looked at it. Hopefully that helps out a little bit. Xavier saying, what level of computer programming do you have and which languages do you think are the best? So my background, I'm way back Fortran days, Fortran 77, and then I went into, originally I learned BASIC, and then after Fortran, then Visual Basic, and I've had experience a little bit with C, very little. I tried to learn it, and it was hard. And then, when I do a lot of macro writing in Excel, which is kind of like an offshoot of BASIC. So that's I would say I was fairly adept with computer programming, especially with Visual Basic. Way back when, somewhere on the internet, you can probably find I wrote a car lease program that was, an application that was a standalone. I actually had to mail out to people on floppies, which was kind of interesting. But anyways, I like a simple language, but again, what's simple for me might not be simple for someone else. So my earlier comment about taking a look at technical analysis of stocks and commodities, see what you get and see what you like. Okay, Oprah is asking about when I'm trading several futures at the same time, do I trade them in a single account in TradeStation? Yes, I do. The only thing you got to watch out for is if you're trading like 2 different ES systems, sometimes they can collide. And that's one of the reasons I use NinjaTrader, because I can get around that. So you got to be careful when you're trading multiple strategies of the same instrument in the same account with TradeStation. It can be pretty tricky. If you go to the website System Trader Success, I wrote, I think it was a 3-part article a while back about how to get around that, so it might be worth reading. David's got a good question here. You mentioned you do mostly swing trading. How do you deal with the fact that you can't monitor your systems overnight? There's a couple ways to get around that. One is you could make sure you don't place any orders during that time. That would require like a custom session usually, but you could do that. The other thing is you run some risk. So a lot of times I'll get up during the night and check things and make sure things are running. And there's times where in the middle of the night, something happens and a bunch of your orders get hit. And those are the times where you hope, if you can't be there to monitor it, where you hope the automation takes care of it correctly. So, yeah, there's definitely a risk there. And I don't have a total good solution. Thoughts, and Trev's asking thoughts on Bloodhound for Ninja. I've never used it. I have worked with some people who've used it, and they seem to be happy with it. There are some limitations to it. I've actually talked to the Bloodhound people about doing some stuff together, but nothing ever come of it, so I can't really comment. Okay, Dory's asking about profit factor. I don't really look too much at profit factor. And some of you are probably going to shudder. I look more at like a profit to drawdown type ratio, so that's kind of my criteria. There's another question of tracking live versus historical results. I have some spreadsheets I share with people I work with where you can track that, where you can track actual results versus what your strategy thinks. But once you get going and once you're fairly good at estimating slippage in various markets, I don't do that as much anymore. Where I will do it is markets where I'm not as familiar with the slippage. So I'll give you an example. I built a natural gas strategy, and it was designed to trade the 10:30 a.m. I think it's Thursday, it might be Wednesday, energy report, and it would place an order right before that report, and then it was like a stop order, either long or short, and if it was filled, it would exit like a couple minutes later. The problem is with that market, everything dries up right around report time. Everybody pulls their orders. So the market can swing like crazy in the beginning. So I estimated the slippage, what I thought it was going to be, and my strategy came out to be pretty profitable. So I said, okay, well, the only way I could test this is to actually run it live. And that's what I did. So I ran it live for, I think, 3 months, where I just traded one contract. So it's only once a week. So I only had like 12 or 13 times I traded, but looked at the actual slippage, compared it to what I thought, took an average, and I found out the slippage was more than I thought. And I went back, adjusted my back test, found out it was still a profitable strategy, but on a risk adjusted basis, it wasn't to my liking. So I stopped trading it. But that's kind of what I did. And really, I just tracked all that via spreadsheet. Dory says, I found anything below profit factor of 2 is not profitable in a live environment with slippage and commission. And I don't know if you're talking about your the slippage after, or if you've already included it, and maybe your slippage is a little off. I'll tell you, for this Japanese yen strategy, let me just run it real quick, and I'll show you what the profit factor is. And I do trade this, so for what it's worth, you can either say he's an idiot for trading it or what, but that's kind of what it looks like. So it's been in a drawdown the last month or 2 months. This is both live results, or real-time results, and backtest results. And as soon as it comes up, we'll see what my profit factor is. So while that's waiting, I apologize for that. We'll go into the next question. Dominic, hey Dominic. Dominic has watched a lot of my webinars, and he always asks great questions, so it's always fun to hear him. Okay, sorry, let me finish the other one. Profit factor of this strategy is only 1.38. Not that great compared to Dory's criteria here, but if you look, now this year it's lost money, but most years it's done pretty well. This year's is actually worst year to start out with, but before that, since it went live in 2012, its worst year, it lost $2,000 one year. 2016 had a great year. So take that for what it's worth. Dominic says, in symmetry, long and short, is that something you evaluate? For example, a strategy has made a $0 profit over short trades, but made a lot in long trades. Would you consider that as a valid strategy? Yes, I would, except you got to realize, you should know that and realize, especially if you're trading a couple strategies. So I'll give you an example. Last January, the end of January, I had a bunch of ES strategies. And of course, any ES strategy you have is going to be, it's almost always going to have more long profit than short, right? Because the stock market goes up over time, right? So I looked at that, and I was trading, I was trading all those strategies, and since they're all sort of long biased, even though they weren't set up that way, that kind of got me into trouble. And I had more of a drawdown than I had anticipated because these strategies didn't want to go short when the market was falling. So that's what you got to watch out for. Obviously, what you'd like to do is be totally balanced, and you can make it long and short side, but a lot of markets, that's not going to be realistic. It's much easier to make money on one side or the other in a lot of markets. But that being said, I do have some strategies that are almost completely balanced. Okay, Dory's left, but she had another question. She might not like my previous answer. Guy asked for the reference again. It was Technical Analysis of Stocks and Commodities magazine. Okay, and that looks like pretty much everybody's question, and not everybody has left the room, so that's always good. So with that, I'll turn it back over to Terry. If I missed your question, please just email me, kdavey@kjtradingsystems.com. Feel free to send me an email. You know, I love talking to people, and thanks a lot for having me.
Absolutely. Thank you, Kevin, for the webinar today, for the presentation, and for spending some time with us this evening.
Well, you're more than welcome. I always love coming on here. A lot of great questions today, so that's always nice.
All right, take it easy, and good night.
All right, thanks.